Investing money is a smart way to build wealth over time. If you want to earn a steady income without working full-time, investing can be an excellent way to reach that goal. But how much money do you actually need to invest to earn a yearly income of $85,000? First, let's break it down. When people invest, they typically aim to earn a return on their money. The return is usually a percentage of the amount you invest, and it can come from various sources like stocks, bonds, or real estate. If you're wondering how much you need to invest to earn $85,000 per year, the key thing to consider is the rate of return on your investments. The rate of return is the percentage of profit you make on your investment each year. It's important to understand that returns can vary depending on the type of investment. For example, stocks tend to offer higher returns than bonds, but they also come with more risk. On the other hand, safer investments like bonds may offer lower returns. Let's start by looking at a common scenario, the stock market. Historically, the average return on the stock market has been about 7% per year after adjusting for inflation. So if you could achieve a 7% return on your investments, how much money would you need to invest to make $85,000 a year? To find this out, we can use a simple formula. Amount needed to invest equals desired income divided by rate of return. In this case, you want to earn $85,000 per year, and the rate of return is 7%. Using the formula, amount needed to invest equals $85,000 divided by 0.07 equals $1,214,285.71. So to earn $85,000 per year with a 7% return on your investments, you would need to invest around $1.21 million. That's a lot of money, right? But don't worry, it doesn't mean you have to start with $1.21 million. It just means that if you had that amount of money invested and were earning a 7% return, you could earn $85,000 per year. Of course, not everyone has $1.21 million lying around, but this figure shows you the power of compounding returns over time. Now, what if you're not comfortable with stocks and want to consider other types of investments? Well, another common investment choice is bonds. Bonds are generally safer than stocks, but they also offer lower returns. Historically, bonds have provided an average return of about 3% per year. Using the same formula, if you wanted to earn $85,000 per year with a 3% return, you would need to invest, amount needed to invest equals $85,000 divided by 0.03 equals $2,833,333.33. So with bonds, you would need to invest around $2.83 million to earn the same $85,000 per year. That's a huge difference from the stock market, and it highlights the trade-off between risk and reward in investing. Of course, you might be wondering if there are other ways to earn a steady income without needing millions of dollars to invest. The good news is there are. Real estate is another popular investment choice that can generate a consistent stream of income.
Let's say you invest in rental properties. The goal is to buy properties that generate rental income, which can provide a steady cash flow. The amount of income you can earn from real estate depends on several factors, such as the location of the property, the size of the property, and the rent you can charge. A typical return on real estate investments can vary widely, but let's assume you can earn an average return of 5% per year. Using the same formula, amount needed to invest equals $85,000 divided by 0.05 equals $1,700,000. In this case, you would need to invest around $1.7 million in real estate to earn $85,000 a year. While this number is still quite large, it's lower than the amount needed for bonds and comparable to the stock market. However, real estate has its own set of challenges. Unlike stocks or bonds, real estate investments require active management. You may need to find tenants, handle maintenance issues, and deal with the occasional vacancy. But if you're willing to put in the effort, real estate can be a great way to earn a reliable income. Another option to consider is dividend-paying stocks. These are stocks of companies that pay regular dividends to their shareholders. Dividends are a portion of the company's profits that are distributed to shareholders, usually on a quarterly basis. Dividend-paying stocks can provide a steady income without the need to sell the stock. The average dividend yield for stocks is typically around 3% per year. So, if you wanted to earn $85,000 in dividend income with a 3% return, you would need to invest $85,000 divided by 0.03 equals $2,833,333.33. This is the same as the bond example, but with the added benefit of potential stock price appreciation on top of the dividends. You might also be interested in alternative investments like peer-to-peer lending, which allows you to lend money to individuals or businesses in exchange for interest payments. The returns from peer-to-peer lending can vary, but let's say you can earn an average return of 6% per year. Using the same formula, amount needed to invest equals $85,000 divided by 0.06 equals $1,416,666.67. So, with peer-to-peer lending, you would need to invest around $1.42 million to earn $85,000 per year. As you can see, there are many different types of investments, each with its own level of risk and return. The key takeaway is that the amount of money you need to invest to earn $85,000 per year depends largely on the rate of return you can achieve. If you're able to achieve higher returns, you'll need to invest less money to reach your goal. But if you're only able to earn lower returns, you'll need to invest a larger amount. It's also important to note that investing is not a get-rich-quick strategy. It requires time, patience, and consistency. Even if you don't have millions of dollars to invest right now, you can start with smaller amounts and gradually build up your investments over time. The key is to start early and stay committed to your long-term financial goals.
In conclusion, earning $85,000 per year through investments is not only possible, but also a powerful financial goal that many people strive for. However, achieving this goal requires a significant amount of capital, and the exact amount you need to invest will vary depending on the rate of return you can earn from your investments. While stocks, bonds, real estate, and other investment options all offer potential income streams, each comes with its own set of risks and rewards, making it important to carefully consider where and how you invest your money. The key to success is not simply picking an investment and hoping for the best. Rather, it's about making informed decisions and remaining disciplined in your approach. Each type of investment offers different levels of risk and return, and understanding these factors will allow you to make smarter choices. For example, while stocks can offer high returns, they are also subject to market volatility, which could lead to losses. Bonds may offer a steadier, more predictable return, but at the cost of lower gains. Real estate can provide a reliable income, but managing properties and dealing with tenants can be time-consuming. Therefore, it's essential to match your investment strategy with your personal risk tolerance and financial goals. Another critical aspect of investing is consistency. The more you learn about investing, the better you can navigate the complexities of the market. Knowledge about different investment vehicles, financial markets, and strategies for risk management will give you the tools needed to build a strong portfolio that can weather market fluctuations. Continuous education, whether through books, online courses, or advice from financial experts, is essential to ensure you're making the best choices for your situation.